Welcome to the Complex Q series from the XFO Intelligence podcast channel. Today, we're diving into a fundamental shift reshaping the financial landscape: the end of predictive alpha, building informational moats in the age of AI convergence. We're in May 2026, and as AI models ingest overlapping datasets, investment edge is becoming harder to sustain. Signal half-lives are shrinking. Position correlations are rising. The traditional quant strategies of piling on more data and bigger models aren't just outdated, they're leaving portfolios exposed. So, how do you build a moat in this convergent environment? The answer? It's not about what you know, it's about how you execute. We're going to break down 4 key pillars to building sustainable informational moats. First, causal validation over correlation. Markets aren't static. Correlations that work in low volatility regimes disintegrate during upheaval. Firms need to validate signals with structural causality, looking at things like supply chain dynamics or regulatory shifts, not just historical patterns. The goal? Understand why a signal holds and under what conditions it breaks. Second, friction arbitrage and execution precision. A mediocre signal with flawless execution beats a great signal with poor execution. Smart order routing, market impact modeling, and liquidity dynamics are your allies. The real moat isn't in the prediction, it's in realizing returns under real market conditions. Third, topological resilience and controlled divergence. When too many strategies crowd the same trade, liquidity vanishes and crashes happen. You need to cultivate independent alpha corridors and avoid crowding traps. Deliberately ensuring diverse outputs across models helps your strategy stay resilient. Fourth, meta-adaptation and dynamic feedback. The faster you can detect signal decay and adjust, the better. Don't wait for monthly reviews. Track half-lives daily. Rotate capital in weeks, not quarters. This kind of nimble adaptation transforms convergence into opportunity. Finally, we have to talk about the human-AI boundary. AI can process scale, but humans must anchor context. Ethical boundaries, risk constraints, and contrarian insights need that distinctly human touch. Remember, this paradigm shift demands new metrics. Measure the realized versus paper alpha ratio, after all costs. Shoot for over 0.75. Track crowding adjusted Sharpe, adaptation latency, pathway independence, and causal validation rates. Align compensation structures to these, not raw prediction accuracy, to avoid subsidizing crowding. The age of alpha homogenization isn't the end of edge, it's a new beginning. The scarce resource isn't information anymore. It's execution, routing, and adaptation. Edge doesn't belong to those who know the most. It belongs to those who execute best. Thanks for listening to the Complex Q series. If you found this insightful, please like, share, and subscribe to our channel. We'd love to hear your thoughts. Email us anytime at xfointelligence@gmail.com.